Hey everybody, this is Jim at SP500chart.com. It's about noon on Memorial Day, May 29th, 2017. I apologize. On Thursday night, I said I was going to do the Thursday night video on Friday morning, and as a creature of habit, I just forgot because I usually don't do them in the mornings. We had company over, and it just wasn't appropriate at that time for me to try to get away and do that. I hope you understand. So I'm going to throw in a little extra for the weekly review. We're going to take a look at the chart of gold, okay? And then we're just going to use GLD as a proxy for gold prices. And kind of an interesting thing going on. So anyway, before we get started with any of this, let me just remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy who draws lines on charts. So let's take a look. Starting out on a 30-minute chart, here we are looking at the S&P 500, and by the slimmest of margins, we closed at another all-time high by 0.03%, according to the good folks at the BATS Exchange. And it looks to me like after that gap up on Thursday morning, we sort of looks like we're in a flag formation, sort of. But I will remind you, we've seen this a few times over the last weeks, and they've ended up not being flags. This happened back here for 2 days on the 15th and 16th. Looked like gap up flag, ready to move back up. Nope, we gapped down and gapped down with some conviction there. So I'm going to hold off on making any bold predictions about the S&P, but I will say that's sort of what it looks like. We have yet to get really technically significantly above 2400, but closing at 2415 and closing in the mid 2014s for 2 days in a row, it's a fairly strong sign. If you look really closely at the way things have been trading, you can see it's a pretty tight little coil that's wound up here, and the general shape of it is about that. So it looks like it's kind of narrowing down. The question is, are we in, I've changed the chart a little bit, are we in a very narrow, very steep rising channel right now? Okay, I know we got a little bit of schlock back here on the back side of it. I understand that. And but I think this top line is good. I think that clearly is resistance. I then snapped that down to a parallel and just sort of tried to get it to somewhat line up. And this could go from here, but that doesn't really make sense because that gives us two tops on this top line, two touches on that top line. So that's why I kind of moved this here, because that takes us from a round trip, top, bottom, top, and now we're right back at the bottom. So we'll know tomorrow, if on the 30th, if this is a channel formation here. We are also now, the last 2 days have pretty much all taken place over the top of this green line, and I'll remind you that that green line was resistance for more than a year here. Well, let's just say it was resistance for a year. Then we got over that line in February and March, got back under it, and now we are sort of hanging around that line. Just a little bit over it for the last 2 days this week, just closing on it with today's close. So I think this looks pretty bullish for the short term. And I'll remind you, we've got targets of 2430 and 2468. We are now closer and closer and closer to those targets. To remind you of some bearishness, there is a rising pennant, rising wedge right here. And that tells us we should eventually be coming back down to 2100, so we need to be on the watch out for that. But right now it looks like our inverted head and shoulders pattern that we built back in 2015 and 2016, that seems to be sort of ruling the day. And this week I think that was probably the driving force behind our significant move upward. Now remember, 2 weeks ago we came back and back tested this purple line right here, which was a pretty clear trend line. I think that is an inverted head and shoulders pattern here. It has a down sloping neckline, and we broke out. We look at where we got above that line, and that's where we get that 2430 target as an intermediate target. Looking at this, it's behaved as such a pattern normally behaves. It forms, breaks out, pulls back, and then gets on back to its business. So just that, I think, is the story of the week. The week we were up all week. We opened near the lows of the week, and we closed right near the highs of the week. Looking at a weekly candle, that would usually tell you to look for the following week to also be a week of gains. But remember, all candlestick patterns do require that second candle as confirmation. So that alone, I don't think is quite enough. I would rather look at the smaller details of this chart, this channel perhaps. If we do see some weakness, we may now find some gap support around 2404 or so. Remember, that also used to be resistance. Twice we got up just a little bit over 2400 and couldn't get over it. Then when we did get over it, we did so with a gap. So gap support, 2404. If we do test it, I think that's a pretty likely spot to look for some support. So there is your S&P 500 chart. Now, sort of as a small added bonus, just going to take a quick look at GLD. This is actually a 4-day chart of GLD, and basically what I want to show you is a couple of things of interest. When we made those highs in gold back in 2011, 2012, when we started to come off of those highs, we made a fairly well-defined descending wedge. In addition to that descending wedge, it also sort of morphed into a descending channel, with this being a resistance. You can see we broke above that in early 2016. Then in late 2016 back tested this line, and now it looks like we are back in a pretty decent rally off of that back test. So what I would be looking for in this is, I'm just wondering out loud, and you have to make up your own mind, but is this wedge going to do what wedges tend to do, and that is bring or eventually see levels return to where they were when that wedge started to form? If that is the case, then we could be seeing a significant move in gold in the months and years ahead. Just thought I would throw that out. So take a look at that chart, kind of examine it for yourself, and interesting stuff, especially this wedge, and then also this this descending channel that broke out and has already back tested. So there's your little extra for my tardiness, well, worse than tardiness, absence on Thursday afternoon and Friday morning. I hope you will forgive me. That said, thank you for taking time out of your day and weekend to watch this, and thank you for your support.